Good morning, good afternoon, or at whichever time you are viewing this video. It may be good day as well, wherever you are watching this video. I want to welcome you to another session of Principles of Accounts. In this session, we're going to look at the topic manufacturing accounts. This is a very important topic as it relates to the preparation for your CXC exams. So please do pay keen attention to whatever is being said and done and throughout this video presentation. At the end of this video presentation, students will be able to calculate the prime cost and production cost of goods manufactured, draw up manufacturing accounts, and adjust the accounts in respect of work in progress. Now, we have to deal with firms that are manufacturers sometimes, right? For these firms, they create something called manufacturing account, and this account is prepared in addition to the normal trading and profit and loss accounts. And a manufacturing account, as you can see here on the screen, is defined as an account in which production cost is calculated. An account in which production cost is calculated. So therefore, manufacturing accounts is used by companies that produce goods for sale. Friends, in a manufacturing firm, the costs are divided into different types, and they may be summarized as follows. Firstly, we have what we call prime costs, then we have what we call production costs, then total cost. Alright, prime cost includes, as you can see on the screen, direct materials, direct labor, and direct expenses. We'll go into details as we go along as it relates to these different points. Alright, so then you have production costs, and as you can see, production cost is prime cost plus factory or work overhead expenses. Therefore, in order for you to calculate production costs, it therefore means that you must calculate prime cost first up. So you calculate prime cost, then the amount that you get from the prime cost, which includes direct materials, direct labor, and direct expenses, the amount that you get from prime cost, you add it to factory overhead expenses. Now, next thing is what we call total cost. Total cost is production cost plus administration, selling, and distribution expenses. So after you would have calculated the production cost now, to calculate the total cost now, you will add whatever you get. When you add prime cost plus factory overhead, whatever you get from that is production cost. You will then add the production cost to administration, selling, and distribution expenses. These terms will be explained later down in this video, friends. Now we'll look at direct and indirect costs. When you see the words direct costs, we know, as shown on the screen, that these are costs that can be traced to the item being manufactured. However, on the other hand, if the costs cannot easily be traced, as you can see, the costs that cannot be easily traced to the item being manufactured, and is included under is what they call indirect costs or indirect expense, and it is included under factory overhead costs. For example, the pay of a machine operator making a particular item will be direct labor. The pay of a foreman in charge of many men on different jobs will be indirect labor and will be part of a factory overhead expenses. As an example, I repeat, for example, the pay of a machine operator making a particular item will be direct labor, and the pay of a foreman in charge of many men on different jobs will be indirect labor. You can pause the video, listen it again to what I just said. The indirect labor now will be a part of factory overheads. Other instances of costs being direct costs include the cost of direct materials, meaning raw materials used to make the product, including including carriage inwards on raw materials and the hire of special machinery for a job. So therefore, here we have it, direct and indirect costs. Direct materials, raw materials that are used to make the products. Direct labor, the persons, direct labor are the, like for example, the production worker, the person who are hands-on in the creation of the goods that will be sold. Direct expenses now are like, for example, you are designing the product, the design of the product. That would fall under direct expenses. The designing of the cost to design the product will fall under direct expense. Now we look at factory overhead costs or factory overhead expenses. You see that these are production costs in the factory that which cannot be traced to the item being manufactured. Examples of these are cleaners' pay, crane drivers' pay, rent and rates of the factory, the depreciation of plant and machinery, and factory power. These are examples of production costs or factory overhead costs. Now we look at what we call administration expenses. This consists of such items as managers' pay, legal and accountancy charges, the depreciation of accounting machinery, and secretarial pay. So these are what we call administration expenses. So the cost of paying a manager, acquiring legal consultancy, accountancy charges, and the depreciation of accounting machinery and secretarial pay are considered as administration expenses. Now we look at something called selling and distribution expenses. Selling and distribution expenses are items such as sales forces pay and commission, carriage outwards and depreciation of delivery vans, advertising and display expenses. Those are selling and distribution expenses, friends. Now, I'm going to ask you to watch this video clip and learn more. This video clip will show you the practical steps of how to create a manufacturing account, a trading profit and loss account, and ultimately it will also show you how to create a full set of final accounts, meaning how to create a manufacturing account, how to create a manufacturing and trading and profit and loss account for a particular year. And this is what you'll have to create on the CXC exam if you are given such a question. You have to create a combination of a manufacturing, trading, profit and loss account. So therefore, pay keen attention to this video clip. These clips will be separate still, but they'll be showing you a practical way of how you go about creating manufacturing account. Well, let's go. This is a real example of a manufacturing account. This shows details of a manufacturing account for Mr. C. Clark. It has been assumed that there are no partly completed units known as work in progress, either at the beginning or the end of the period. So here are details, friends. Alright, let's go now. First one, details for production costs for the year ended December 2007. First of the first 2007, stock of raw materials $500. This is what they call opening stock. 31st of the 12th 2007, stock of raw materials. This is the closing stock of raw materials. As you can see, is the end of the year. Now we have something called raw materials purchase, which is $8,000. Manufacturing direct pay $21,150, and rent of factory buildings excluding administration and selling and distribution $440. Depreciation of plant and machinery in factory $400, and general indirect expenses $310. Now we are going to show you how the manufacturing account for C. Clark would be written up. First thing you do is write the name of a person who is C. Clark. Then you write in the term manufacturing account for the year ended December 31, 2007. What you can do, friends, is pause the video. Every time we go on a thing, pause the video, write it down. While you pause the video, write it down. Pause the video, write it down, and follow as we go along. Please do that. As you speak, you pause the video, write it down. As you see any information popping up, pause the video right there and write it down and listen as you go along. So first thing, you, as I said before, you place the person's name here. I guess you'll understand. You place the person's name right there. Place the person's name right here, C. Clark. Then you write manufacturing account for the year ended December 31, 2007. Then we begin the manufacturing account with stock of raw materials, 1st of the 1st, 2007. This figure comes from the top right, $500 right here, stock of raw materials. Yes. Then after that we add purchases, which is $8,000 from the top. Purchase raw materials, purchase $8,000 from the top. Then we less stock of raw materials, which is the closing stock of raw materials, which is 700. You add the 500 plus 8,000, then you less the 700 from the 800 to 500. The figure that you get when you less the stock of raw materials from up the top there, the figure that you get will be described as cost of raw materials consumed. So when you less the closing stock of raw materials from the figure that you got when you add both the opening stock and the purchases, and you less that figure, you come up with cost of raw materials consumed. Then we go down to something called manufacturing pay, and friends, which is what they call direct pay. For example, direct labor, direct expenses, and direct materials go right there. Direct expenses or direct pay right here. So if you have something called direct pay, it comes right here. So therefore, here we have a figure of 21,150 from the top. Right here, this figure is called direct manufacturing or direct pay. You carry it down right here. Then what you would do now, you would add this to this. As we said before in the video presentation, that when you add prime cost, when you add all direct, so direct materials, direct labor, and direct expenses, when you add everything up there, you get prime cost. Raw materials are direct materials, friends. Manufacturing pay is what we call payment for direct labor. That's basically it, friends. Here we don't have any direct expense. We don't have a direct material, which is stock of raw materials, and direct labor, which is manufacturing pay. So here now we add 21,150 to 7,800. When you add that, you get what they call prime cost, which is 28,950. Then we go down a bit further. We're going to look for factory overheads now. First thing we have is what? Rent, which is 440. We place it right here, as you see. Then we have indirect pay, which is $9,000. Then we have general indirect expenses, which is what? 310. Then we have depreciation of plant machinery, 400. You add up everything. When you add up everything, you get a figure of 10,150. Now, to calculate the production cost of goods, what you do? We add what? Prime cost plus what? Factory overheads to get production cost. So prime cost plus factory overheads gives you production cost. Remember that. Prime cost plus factory overheads gives you production costs, which is equal to 39,100. You can pause the video, write out the information, and then continue the video afterwards.